Let's get a bit of a pulse on what's happening across social media. Looking across social media in the past 24 hours, the memes have been pretty focused on war. But in terms of the memes for the crypto market, they've been pretty positive. Of course, we've got our usual suspects. The war in the Middle East absolutely derailed price recently. But it's like so many things, we don't need certainty, we just need a method to deal with uncertainty and to profit from it. Let's go through a bit of an analysis on what's happening inside social media. According to many experts, we're just in the process of taking off, and the altcoin season is just around the corner. The altcoin season is where altcoins just outperform Bitcoin. The chartists on social media are projecting a lot of upward price momentum to come. And they're basically saying, as they've been saying for literally the past 6 months, that we're just about to take off. Anybody who's been following the memes or the charts on social media has seen these 1,000 times before. But I'd like to take you through them because when you look at social media, you've got to be aware of stories. Stories are wonderful to tell your children, but not so wonderful to invest and trade by. There's charts flying around about M2 global liquidity. The concept, it goes up, Bitcoin goes up. If Bitcoin goes up, of course the alts go up with it. And of course, if alt season hits, the alts really go up. The charts floating around at the bottom are saying, yes, this is looking really good. We're bottomed out and we're going to go higher and higher and higher. In fact, when we look at the current cycle of Bitcoin, we're just getting started. Where's this exponential takeoff phase? And the chartists are putting out many different price projections, this one up over 400. But don't forget, as many people are positive, there are some negative people as well. And people are saying, we've reached the top, we're going back to $57,000. Of course, what we know, everything is structurally based. I just thought I'd share these as well because they're pretty cool. Over time, purchasing power due to inflation erodes buying power. For example, in 2010, on May 22nd, 10,000 Bitcoin bought 2 pizzas. And when we look at $1 million for retirement, how long $1 million would last? From 12 years to 89 years, you can see the shortest is in Hawaii. What are they doing there? And if you need $100,000 per year to retire at all sorts of different ages, this is the amount of Bitcoin that you need over time. So if you want to wait to 2075, well, the idea is that Bitcoin will get really, really expensive. And some interesting charts that are popping out just recently. A lot of people are starting to say that this Michael Saylor cycle is just going to take all of this turbulence out of Bitcoin. We're not going to have to worry about anything. Everything will be just nice and neat. The funny thing, when you look at a log chart, and yes, I did cough deliberately. When you look at a log chart, if you go from 800 down to 400,000, that's a 50% drop, and that's a lot. But boy, oh boy, it doesn't look it, does it? There are some other models out there, such as the Bitcoin power curve, and we can see that that curve is pretty interesting. It's all pretty interesting. And Michael Saylor is saying, I want more Bitcoin. And what are BlackRock doing? Yeah, they're getting more Bitcoin. There are also some head and shoulders targets that take a measured move from the head up here to up here of around 150,000. And there's talk that we're just getting close to that exponential takeoff phase, this one right here. And something kind of interesting, a cool meme. I've just been through the most traumatic situation of my entire life. It's all over. Oh no, it is what it is. We're so back. Oh God, done it again. In other words, if you're going through a life pullback, please know that the sun will come out again. Things always get better. You have to focus on the positive. And what couldn't be more positive than the fake Satoshi saying Bitcoin is only around $2 trillion. It's going to overtake gold's market cap and come for real estate. Yes, we're going to live in digital houses. And of course, we know that the only thing that profits is knowledge. Now, what is this guy? This is Total Crypto Market Cap. And what is this charter saying? Well, it's pretty damn clear, isn't it? I follow the little yellow ball there and there. Oh, this is about to take off. And why indeed not? And when we look at this, oh, this is also focused on that. Yes, everything is leading the retail herd in only one direction. But Ken, what about the war? Well, Crypto Rover popped out this thing, Iran-Israel headlines, and then again, so nothing to worry about. And let's look at this chart. Oh, you got this rectangle, that rectangle. Oh, after that rectangle, you get all of this. It's going up. Be really careful, people. Price is always moving in a wave. It doesn't mean this analysis is incorrect by any stretch of the imagination, but what it means, if something goes up, it also comes down. You always have wave-based patterns inside everything. The up-only kind of idea is one that will just bleed your account, so please be aware. And what are we seeing here? We're seeing a bit of the shorts are above, the longs are below, and these are liquidation levels. So far, pretty even. Now, when we go to 5 weeks of indecision, and what are we looking at here? This is again Ethereum, and we're saying, okay, so we get a break of structure. Not much of a break of structure, not much of a boss, is it? Because it hits it and dies. But what is this saying? This is saying, just from a visual perspective, all of this is absolutely support. We're going to look a little bit later on structure, but I wanted to take you through what social media is saying. And again, we've got another one on Ethereum. Let's have a look at another one on ETH. Oh yeah, up only. It can only go up because it's obviously come down, so it needs to go up from there. Oh, another one. Okay, just a kind of a different slant on the same picture. What is this one? Bitcoin to Ethereum. Oh, capital rotation. It occurred right there, according to Crypto Rover. And where would anything be without our XRP posts? And XRP is going to go parabolic. According to Steph is crypto. Steph is crypto. He's not talking about crypto, he is crypto. So optimistic, realistic, and conservative, wow, good stuff. Now, we know, of course, that it's all structurally based. What we need to do is to see how price interacts with structure. All of this is pretty neat, but it will lead you quite astray, not on any particular project, but just on all of them. If it's not going above, it's going below. So structure is what you need to know. Oh, I'm a poet and I didn't even know it. Let's cover off crypto action across the weekend. Now, what we saw, a very large sell down, a bit of a recovery throughout the weekend, and it's just pretty much gone flat line. But were there any safety nets inside market structure that could have assisted us? Yes, there were, and they were actioned very, very effectively. You want to always look structurally to Total Crypto Market Cap. It will tell you where the safety nets are. Now, what typically happens when people see behavior like this, they run screaming for the exits. They're just abandoning ship across the board. After all, Warren Buffett so famously said, hey, if it's red, number one rule in money, how to make money from markets, don't lose money. But yet Warren Buffett does lose money, and he holds on to things and he invests long term. So just to be aware, sometimes the advice people give, they don't actually follow. But one issue is really, really clear. Inside and across the entire crypto market, we had all of this structural support. Price right across the crypto market came into this structural support and was bought up. Now, this is exactly what we would anticipate. Now, a couple of things. We can't just look at Total Crypto Market Cap and make our decisions from there. We also need to look at Bitcoin. Right now, the entire crypto market is 3.23 trillion. We do have overhead structural resistance at that $3.245 trillion mark. This is really important. If we don't get across here, we're not going higher. And all of those people with their charts expecting positive blowout action, they'll just change their charts to sing some other tune. Instead, what we need to do is to look at structure. If you don't get above resistance, you're staying below it. The probability is that you will come down to support. But if support is held like it was here, you're going back to resistance. So therefore, have structure as your guide, not stories. That is, if you want to make money. When people are new to trading and investing, they know absolutely nothing about intercorrelation and interconnection. What this basically means is that when you look at a chart, for example, Bitcoin follows the major market indexes. A lot of people think that Bitcoin is independent, and that's why you get a lot of people just talking about a chart without any real context or understanding. Now, what would happen if the main markets were selling down and selling down hard? Would Bitcoin just rally? The answer is no. Now, there are some examples where this does happen. You can see here the S&P 500 and the Nasdaq came down and Bitcoin was rallying up. But the issue is, it's very, very clear if you look at the overlay between the stock market and the crypto market, that crypto cannot escape the stock market's gravity. Gravity is not the same as moving in lockstep like some military formation. If you're after that, just watch the parade, because you won't see that in the markets. But gravity is a real factor. So if we just did a little bit of zooming in here, now what are we looking at? Bitcoin is going up and down as we would anticipate with the stock market. Now Bitcoin felt that risk off first and it was selling down. Now if we get further sell downs in the S&P 500 futures, in the Nasdaq futures, in the Russell futures, the Dow futures, and the Dow and the Russell look quite weak, and the DAX has been a little bit weak as well. That would favor lower structural levels. But if we get a bit of a kick up here, we're going to favor higher structural levels. So many people devote hours and hours scrolling through social media memes and social media charts, just wanting to get led by other people, get led by the chart instead. If you know what the futures are doing, you've got a very good indication as to what the crypto market will be doing as well. Not precise, not 100% overlay, but the gravity is there. When we look at Bitcoin across that same period of time, the sell-off and then across the weekend, this could look really random, and to most people without statistical training, it is random. But when we mark up our charts with level 1 and level 2 standard certification, we know that total crypto market cap was coming into structural support around that $104,000 mark, and that hit really well. Now, one of the things we've been dealing with is this 106, around the 106-130 area of structural overhead resistance. We got up to there, were rejected down to lower levels. We had all our structural failures, a structural underside retest, and we came down into lower structure. Where you get more and more confluence, you get more and more reactivity. When we look at a line like this, any of these CTKS levels, we know the price is going to interact with it. And what do we see here? Basically, we had that interaction with those 104,750 levels, and then it came up to the 105,190 level, around that 105,200 level, and rejected. Bitcoin is currently at 105,071. If we get above here, we've got this structure to deal with. And when you know where the structure is in terms of the levels, it's an absolute game changer. But please remember, you need to look at Bitcoin and total together. One important thing to understand, let's have a look at Ethereum. When we look at Ethereum from a structural perspective, these CTKS levels can create what are called GWs, or gravitational wells. They can overshoot, and we saw total crypto market cap and Bitcoin flip Ethereum back up there. It flipped all of the crypto market up. Now what we're seeing is a bit of strength in here, because when we look relative to Bitcoin, it's a little bit different. Bitcoin is down around here, Ethereum is up higher. ETH is currently 2542, but it does have this 2544 structural overhead resistance that it needs to flip into support, and you can see just by flipping it once is not enough. If we find that the buyers are starting to fade out, we'll sense and detect weakness inside price structure. When these weaknesses emerge, you will be coming back to lower structural levels, so always keep that in mind. And of course it goes the exact opposite way too. When we start to see the buyers coming in, that will take it up to overhead structural resistance levels. Let's have a look into XRP, and in XRP it sold down on Friday the 13th, and then it consolidated through the weekend, and it's been doing pretty much what Bitcoin, Ethereum and Total have been doing. Now when we look at this from a structural perspective, and you can pick up these structural indicators from ctksmethod.org, you can see all of this structure around the 210 and really around the 209 area. This is very significant. This is where the algorithms and the buyers will step in to support price. And we had a confluence across total crypto market cap as well. Lots and lots of confluences. We've seen that XRP came down to this 214.50 area of structural support and bounced. But it didn't bounce in isolation. This bounce was caused by total crypto market cap and Bitcoin. You really need to forget stories if you want to make money inside financial markets. Don't get caught up in the tribalism of this is better than that and that's worse than this. It's not true. Any professional investor or trader will tell you straight, your business is the business of making very good financial decisions, financial wealth. You can understand which particular projects will increase more than others by doing analysis. But literally everything comes back to structure. We can see that XRP is just marginally above a structural resistance level, and it's currently 216.49. Now what causes an exponential takeoff in Bitcoin or XRP or Solana or Ethereum or Doge? It's literally just getting above structural overhead resistance levels and having lots and lots of underpinning structural support levels, especially really strong ones. You will see time and time again that different charts behave differently. This is always because of structure. And when we look at Solana, how strong it is. It's stronger than just about anything that we've looked at. Why is this the case? To answer that question, we must look at structure. And what have we seen structurally? You can see that Solana is currently 151.37. It sold off through these structural support levels, and it needed more and more safety nets to fling it back up. But this particular level was a doozy for Solana. That level was the 146.60 level, but look at this, because we had a positive CTKS gap up, Solana got really explosive until it hit this structural level, which is at 150.76. But now look at all this overhead structural resistance. This is what's causing Solana to start to back off, because all the sellers are inhabiting these levels. If you don't know structure, you're simply tea leaf reading. Something that you might find really interesting, Fidelity and Goldman Sachs and JP Morgan, all the big guys on the top end of Wall Street, they don't give two hoots about what is posted on social media unless they're seeking to fade it. If you think that Goldman Sachs analysts just pop into X and say, I need to know what the signal is inside, for example, the crypto market, you'd be holding your breath for a really, really long time. Therefore, if they don't do it, why do you do it? You're just going to get really, really confused. Instead, know how financial markets work, and we can already see we're starting to see some green inside the S&P 500 and the Nasdaq futures, and that's created a bit of green inside the crypto market. These markets are intercorrelated and interconnected. There's so much that you need to learn, and especially so many ways that you need to think. And for our Australian audience, our Australian global family, the ASX would be expected to follow the US indexes up. So keep your eye on Bitcoin to know what the futures are doing. Now, if you understand what I just said, then please explain it to other people inside the comments. There are many people inside our global CTKS family who have incredible expertise. And just to remember, stronger CTKS levels are thicker and structured, all clustered together, and thinner ones are spaced out and they're lighter. There's a lot of free resources at ctksmethod.org. Please check them out. And it's always nice to remember that we are not dependent the way that other people are. People are dependent on the news, on signals, on social media, and they get very excited from either direction. We are very level-headed. We're literally institutions of one. We just look at our support, we look at our resistance, we look at intercorrelation, interdependence, we've got our three-way strategy already figured out, and we look at the cheat sheet. In other words, we know what we're doing. We don't need to be emotional. And when you're emotional, you will in fact make losses. If you're trading and investing for the thrill of it, please don't do that. You really need to master your emotions, because mastering emotions is the absolute doorway into consistent profitability. And please check out this free price action masterclass. It's on YouTube. You'll find an absolute game changer. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.